All right, all right. Good evening. Happy Friday, everyone. All right, happy Friday. We made it another week. Looks like we ended in the green today. So thankfully, that little public feud that we, suffered earlier this week seems to have resolved itself. We ended in the green. Lots to talk about today. All right, we're going to be talking about the S&P 500 reaching, 6,000 points, which is awesome. We're going to be talking a little bit about, the Stargate project in the UAE. All right, I think it's very important we cover this piece. We'll be talking a little bit about Amazon, some gold, and our boy Strategy, or our boy Michael Saylor. Strategy just released their preferred share, their new one, Stride. So we'll be talking a little bit about that. We'll be talking also about some U.S.-China trade updates. All right, and then we'll just move into the last segment, which will be kind of crypto, and then we'll move into, of course, always the market updates and then the portfolio updates. All right, so lots to cover. Hope you guys are ready for this. Today was actually kind of a good news day, which, I guess you could take it or leave it depending on where the market ends up. All right, so just for a quick portfolio overview, I am only down 13, looks like $12,000. All right, I'll take it. I was down again $20,000 to $24,000, but it looks like the portfolio is trending up and to the right again, which is always a good thing. I didn't know that a public feud between Tesla and Donald Trump would crash the market, but apparently so. All right, let's continue on. So this is how we're going to start the stream off today. S&P 500 closes above 6,000 for the first time since February after strong May jobs data. All right, this is a very good sign, but there's some not hidden things. This is pretty public, of course, but there's some other things we need to think about for the future, okay, especially when it comes to the Fed rate cuts. All right, Wall Street's major averages on Friday took home gains with the S&P 500 reclaiming the 6,000 level for the first time since late February. All right, sentiment was boosted by a strong May jobs report. All right, the benchmark S&P 500 added a percentage point to the end at 6,000.36 points. Its first close above that mark since February 21st. All right, meanwhile, the NASDAQ and Dow Jones finished 1.2 and 1.1% respectively. All right, before the opening bell, May non-farm payroll showed an increase of 139,000 new jobs versus the 126 consensus, or what was expected, and 147 prior, right, from the prior month, according to the US BLS. All right. After the report came out, Trump once again blasted the Federal Reserve Chief Jerome Powell for not lowering interest rates. All right. Who needs technical analysis? Who needs any of that garbage? Who needs the Intelligent Investor book by Benjamin Graham? Who needs anything, right? Long-term holding, all that stuff. Who needs any of that when all you can do to get the best updated market insider information is go straight to the man himself, DJT. This is where you can get the best insider information of whether you should buy stocks or not, right? Or where the market is going to go. But he posted this, right? Too late at the Fed is a disaster. Europe has had 10 rate cuts. We have had none. Despite him, our country is doing great. Go for the full point, rocket fuel. So this is Donald Trump's freaking Truth Social post. He's basically calling, Jerome Powell too late Powell, right? He always says this. I say we have Senpai in the chat. DJT is the GOAT. Absolutely. I wish I could do a voice for him, because it's every time I read his whatever Truth Social posts, his tweets, whatever you want to call them. I laugh. It's so funny just the way this dude types these out, and it's him. Like, it's not one of his marketing people or anything like this. Is like legitimately him. So this is just crazy. Anyways, going back to this, all right. May's payroll performance data was the second strongest of the year and is dampening concerns related to trade conflicts while quelling fears of an economic slowdown. All right, but we're gonna get into what JPMorgan is thinking about as far as an economic slowdown. All right, Torres added, but despite President Donald Trump's calls for the Fed to cut rates immediately, rates are jumping in a bear flattening fashion as buoyant growth expectations and a lack of safe haven demand drive yields north. And that's not really a good thing. The risk on posture is further evidenced by weakening gold prices as well as unwinding volatility protection instruments. So basically, translation is people are getting out of safety and they're moving back into equities. And we know this because the S&P 500 is up again, right? We are in the green. We're doing good. So we know that. Wall Street closed in the red on Thursday as Tesla shaved off more than $100 billion in market cap amid a public verbal spat between the U.S. President Donald Trump and CEO Elon Musk. The latest news I had on that was basically Elon had dropped a bomb on DJT saying that, hey, you're on the Epstein list, right? Which is, really, really bad. I mean, that's a shot. Like, that is a shot across the bow. That is not good for him. That was not a smart move, in my opinion. That was very, I don't want to say unprofessional, but I would not have guessed that he would have said something like that. And now, of course, my computer is breaking. There we go. I don't know. I guess something broke here. Maybe they canceled his account. Oh, that sucks. Anyways, that was bad, right? Elon Musk to do that, to say something like that publicly was not a smart move, in my opinion. Of course, there was another post from DJT basically saying, or he had a post from a lawyer that says he is not on that list. But it looks like it ended somewhat in the positive. You had Bill Ackman, he came in. He's another billionaire, a hedge fund manager, or not a hedge fund manager, but a fund manager. He came out and basically said, "Hey guys, let's cool it, let's chill, let's do it for the greater good of the country." And Elon Musk is like, I agree. We'll chill out. We'll calm down. Hopefully that public spat is done, because that was not good for Tesla shareholders. That was horrible for Tesla shareholders. They got absolutely roasted on Thursday. So, it looks like it popped back up here today. It looks like it did really well. It looked like it bounced way back up. But again, I mean, Tesla has the Elon factor. He is the volatility for that stock. It has nothing to do with its fundamentals, nothing to do with its, future prospects, its developments, anything like that. It's just strictly Elon. So hopefully that is over and done with. Hope anyone who got in on Tesla did really, really well. Anyways, moving on, guys. All right, so we have some news coming out about the US-China trade deal. All right, so we're going to watch this clip and then we'll dive into it.
Welcome back. Stocks edging higher this afternoon as we've got some more breaking news out of the White House. Eamon, hello again. What's happening?
Kelly, the next meeting between the United States and China is going to be on Monday, June 9th in London. That, according to a social media post from President Trump just a couple of moments ago. In the social media post, the president says, "I am pleased to announce that Secretary of the Treasury Scott Bessent, Secretary of Commerce Howard Lutnick, and United States Trade Representative Ambassador Jameson Greer will be meeting in London on Monday, June 9th with representatives of China in reference to the trade deal." The president says the meeting should go very well. Thank you for your attention to this matter. As he often signs off this kind of tweet. Look, the president laying out here that his top trade team is going to meet with China's top trade team. That was one of the outcomes of the call between President Trump and President Xi earlier this week, was an agreement to an additional meeting. Now we know when that's going to take place and that it's coming up rather quickly. The other big outcome from that call was the idea that both leaders had invited each other to each other's capitals for a face-to-face meeting. The dates of that exchange, or the first one of those exchanges anyway, we don't have yet. But the state planning and everything that takes place for those kinds of visits is enormous. The Treasury Secretary can much more easily hop on a plane to London, as apparently he's going to do over the weekend, for that Monday meeting. And now I think a lot of market folks are going to be focused on whether or not there's a deal that can be reached between the U.S. and China. The president suggested in the Oval Office earlier this week that they had agreed to some things on that call, but the details of those things needed to be ironed out. And that's what this meeting in London apparently is going to be. No details on what those things are, potential agreements, or where things are going to land on Monday.
We're showing aim in the markets, the S&P.
Yeah, so you guys heard it there. All right. The dream team, you have Scott Bessent, Secretary of Treasury. You have Howard Lutnick, who is the trade, Jonathan Greer is a trade rep. And then Howard Lutnick is the Secretary of Commerce. So all three of these guys are headed to London to hopefully solve the problem, hopefully get this trade agreement back on track. DJT and China's President Xi Jinping, they had their conversation on the phone for about 90 minutes over, earlier this week. And you would have thought that would have been the greatest news. Markets jumped, markets ripped, but then, of course, that public spat between the president and Elon Musk was not a good thing, right? But from that trade agreement, it really was a tit for tat leading up to that. You guys have heard me talk about this before, right? It was a tit for tat. We weren't getting the rare earth minerals. We weren't exporting semiconductor software or even semiconductors, and we weren't allowing in semiconductors or chips from China, right? And then you also had another big one was that the United States administration just said, hey, for Chinese students coming to the U.S., we're gonna stop that, and that was not good. So China was obviously very upset, but it looks like over the phone they figured it all out. They got the rare earth mineral thing figured out. So I saw an article that the big three automakers are receiving rare earth metals, which I guess is needed for a lot of their vehicle production. So that's a good thing, but I guess also magnets. But anyways, let's take a look. Bessent, who has been leading the administration efforts to craft a deal with Beijing, will be joined by Commerce Secretary Howard Lutnick, U.S. Trade Rep Jamieson Greer. All right, the scheduling announcement comes as the U.S. and China have squabbled over numerous issues in the midst of a debilitating trade war that threatens both economic superpowers. We've been going through this for quite a while, but it looks like the market is already priced in like a positive event. It's referenced. I mean, you could just look at the stock market, right? The S&P 500 closing higher. It looks like everything's already priced in, and the whole fear, doom, and gloom FUD seems to have passed. We're still waiting on deals to be made. Again, this is going to be a busy month because July is where the tariffs are supposed to get turned on. So if the tariffs get turned on and no trade agreements have been reached, then the tariff of a regular 10% will just be placed on everybody. However, we still need to hear from, some of the other bigger trade partners. You still have South Korea, you still have Mexico, you still have Canada, and of course China. So we'll see what comes from that. And of course there's the Asian countries that make up ASEAN. So we'll see what comes from that. Again, if those news drops, good trade agreements, then we could potentially be seeing new all-time highs for the entire market. All right, Beijing protested after the U.S. Commerce Department warned the chip industry against using Chinese semiconductors. China also objected to the Trump administration's recent announcement that will revoke the visas of Chinese students studying in the U.S. The Trump administration, meanwhile, has accused Beijing of slow-walking a pledge made in Geneva to approve the export of additional critical minerals known as rare earths, right? That's really what this was all about. It looks like it's gotten solved now, so we can move on. So hopefully next week we will see some better days. Some good news will come out. Hopefully on Monday about this trade agreement. All right, or at least things will get a little more clear. All right, so this is coming from JPMorgan. All right, again, just like to listen in, like to understand their points of view, so we as investors can better position ourselves. All right, but again, take this piece with a grain of salt. So this is coming directly from JPM. The U.S. economy is gradually slowing down despite the tech lead in market gains. All right. The U.S. economy is gradually slowing down despite the S&P 500 recently climbing back above 6,000 for the first time since February, according to David Kelly, JPMorgan Asset Management Chief Global Strategist. I don't know where you guys sit on this. I mean, I'm kind of torn as well, but there definitely can be an argument that the stock market is completely disconnected from the economy at this point, right? We still haven't really felt the effects of tariffs. And really, it's the Mag 7 plus, a couple other companies that are leading the market to all new time highs. So it seems like the market just doesn't care with what's going on. Everything was driven by, positive news and, good developments, Middle East tours, NVIDIA getting bought out like crazy, future demand, earnings, all that stuff. All that played into the S&P 500 being where it is today. So we still have not felt the full effects of tariffs. And I think after this quarter is done and when earnings come again, we'll see what the real effects of the tariffs were, right? And then, of course, over these next couple of months, we still have, economic data coming out. Right now, inflation is showing that we're trending downward, right? We're at 2.1%. But the Federal Reserve, this is also a double-edged sword because they don't know what to do. They don't know if they should cut rates or, the economy's looking good. So why cut rates, right? Jobs, everything's looking good. Why cut rates? So now there's talk of a possible rate cut in September. But again, I wouldn't hold my breath. I would not be surprised if we don't even get a rate cut in September. Anyways, in an interview with CNBC, Kelly highlighted that the recent jobs report was a lot softer than headlines suggested, noting that we saw over 600,000 jobs lost according to the household survey. That's a negative signal. Kelly projects that the U.S. economy is heading towards modest growth of around 1.5%, not the 3% that some have suggested. This is a 1.5% economy. This is not a 3% economy, he stated, while explaining that job growth might average closer to the 100,000 going forward, though it could bounce negative. All right. Despite these warnings, signs, Kelly supported the Federal Reserve's decision to hold off on rate cuts, citing ongoing inflation pressures. All right, the Fed has got a responsibility to control inflation. All right, while acknowledging that productivity will increase long-term due to AI, he emphasized that businesses need more incentives to invest. Right, and then again, there we go. Just he's keeping in mind artificial intelligence. You guys take what you can from this. I don't know what to do with, this. Like, whenever JPMorgan or these big banks, Goldman Sachs, Vanguard Group, whoever, it doesn't matter who, whenever they come out with these projections or these, forecasts, I always take them with a grain of salt. I just don't know what to do with, kind of the information, because there's still that lingering thought that the U.S. is headed into a recession. Despite all the good, economic numbers that are coming out, despite all that, there's still a belief that, the United States still has a 35% chance of heading into a recession. So again, who knows? It's just crazy, right? All right. This is for the Stargate project. This news came out. And again, it's funny, we spoke about this, but the US-UAE multi-billion-dollar AI data center campus deal is far from finalized, sources say, right? And this has to do with, the UAE having a bunch of shell companies that are linked to China. So, the UAE has this reputation of basically buying up chips and then exporting them to China, right? Either through the black market or through shell companies, right? A multi-billion-dollar deal to build one of the world's largest data center hubs in the United Arab Emirates with U.S. tech is far from being concluded due to persistent concerns around security, sources familiar with the matter told Reuters. So basically what this is saying is that, there's these plans to build this huge data, center AI campus in the UAE. We want to give them NVIDIA chips. We want to give them all the software, all the hardware from AMD and everything, right? We just want to give them as much as possible to build this data center. However, there is a problem. All right, the UAE does have a lot of deep relations with, China, and, the UAE wanted to initially, I suppose, hire, foreign nationals to manage this data center. Well, national security concerns from the U.S. side is saying, hey, wait a minute, like, we don't want foreign nationals even touching these data centers. We want these to be U.S.-led companies that are going to be managing these data centers. So that is actually kind of a stunning development. That could put a damper in things. Now, the administration is committed to completing this deal, getting the data center built up, shipping all the chips and everything. But there's some things that the UAE needs to do in order to ensure that. One is that they can't use, Chinese Huawei products. For those who are new to the stream or those who have never heard me talk about this, Huawei, a lot of their stuff, a lot of their pucks, their switches, their routers, all that stuff, they do send your information to China. I've spoken with and know a few cybersecurity professionals in the field, and they have confirmed this. You can even, test this yourself, which is absolutely wild. So again, guys, you got to be mindful of this stuff. And the U.S. is definitely mindful of this because they don't want Huawei technology even remotely close to U.S. data centers. This might also be a reason why there's a lot of, Huawei, technology that's not allowed in the United States. So again, guys, this is real. This is what happens. This is actually happening in the world. So, how does it even relate to us as investors? Well, if you're investing in NVIDIA, for example, NVIDIA is a big player in this UAE, multi-billion-dollar project. If this thing was to ever go awry and, be a problem. This could probably impact, I would suspect that this would really impact NVIDIA's, share price. Investors would lose a lot of confidence because now the demand for NVIDIA chips is going away. There's like 100,000 chips that are supposed to be shipped, to the Middle East, 100,000 plus, take away the UAE and the data center, and NVIDIA's, obviously the bottom line is going to be impacted. So you have to just keep this in mind. Oh man. So we got Michael Anthony. Hey, welcome. SOUN, a report came out saying it has more upside than Palantir, that SOUN is a better company than Palantir. I don't know SOUN, so I'll take a look, but thank you for that. Oh man, we got, wow, a super chat. Eugen, appreciate your content and constantly dropping financial gems. Love the channel. And that's coming from Douglas Butler. Thank you so much. I really appreciate that. Thanks for the super chat. So anyways, getting back to this, this whole US-UAE multi-billion-dollar data center stuff for the Stargate project and all of that, it's important to keep an eye of what's going on, right? And I keep talking about this, U.S. dominance in AI and trying to maintain its hegemony in the world and its global superpower. This is a part of that. This is all a part of that. If we're forcing these Stargate projects or these data center projects or all these other companies to adopt, anything to the beat of the United States, saying, hey, we want U.S. companies running these. We're going to sell you U.S. hardware. You guys just build up the data centers, and then we'll line up all the partners. You have Oracle, you have NVIDIA, you have AMD, you have Microsoft, you have, by extension, I guess, what's the other companies? Broadcom, you have Taiwan Semiconductor, you have all these other companies and tertiary companies that are going to benefit from something like this. So it's very important to keep aware of what's going on, right? Especially at the political level, right? Politics does influence a lot of finance. So AMD is in the news. AMD acqui-hires Untether AI team. All right, AMD has been on an absolute rip, just acquiring as much AI talent as possible. They're trying to keep up or even, get up to the level of NVIDIA. I don't personally see it, but if you are a believer in AMD, this could be seen as a definite tailwind because they've been on an acquisition spree recently. All right, so AMD is continuing its acquisition barrage, having acqui-hired the team behind AI inference processor startup Untether AI. AMD has entered into a strategic agreement to acquire the talented team of AI hardware and software engineers from Untether AI, an AMD spokesperson told the news outlet. The transaction brings a world-class team of engineers to AMD focused on advancing AI's compiler and kernel development capabilities. All right. The Untether AI acquisition is the third for AMD in the last several days. Late last month, AMD said it purchased Silicon Photonics company Enosemi to boost its co-packaging and artificial intelligence prowess. Earlier this week, AMD disclosed it had purchased open source software company Brium to further its AI prowess. So again, AMD betting big on artificial intelligence. This channel, we talk or at least these streams we talk so much about artificial intelligence, the AI thesis, and the next 4 to 10 years worth of demand. So again, if you want to take advantage of this, thesis, there's so many different companies out there. You have Taiwan Semiconductor, you have Broadcom, you have NVIDIA, you have AMD, you have Palantir, you have the hyperscalers, Amazon, Google, Microsoft. You have Oracle, which surprisingly, I'm surprised Oracle's doing this well, but you have Oracle. And then you're going to have the actual hardware, right? Companies. You're going to have Supermicro. You're going to have companies like Cisco. These are other companies that are going to take advantage of that. And then not only that, earlier, was it this week or last week, Meta, Facebook made a deal with, I think, I forget the company name, but it was basically a power providing energy company. And they made a huge deal with them. I didn't cover it on this channel just because I didn't think anything of it. But having read into it, it was, that was actually a really, really big deal for Meta because, again, they're building out their data center footprint. So, again, data centers in demand, right? And everything that goes into a data center. So just wanted to cover that piece. Excuse me. Amazon is set to test AI-powered humanoid robots for deliveries. All right, this is really, really interesting. I'm just gonna read the whole thing because I thought this was really, really cool. Again, the heat is is starting to heat up for AI powered robotics. Okay. I talked about Walmart yesterday using drone tech to basically deliver packages, right? Amazon's already doing that with, some of their locations. Walmart and Amazon, obviously they're competitors in the retail market. So again, this is another case of, a company utilizing artificial intelligence or physical AI robotics in order to accomplish something, right? And of course, thinking further than this, think of jobs that can be replaced by robotics. If you have a warehouse full of humans just moving boxes left and right or packing trucks, what's going to stop this warehouse from firing their entire staff, hiring a few engineers to just have a bunch of robots doing that job, right? Again, it's a scary thought, but it is definitely something that people are moving towards, or companies are moving towards. You have the autonomous taxis that are being rolled out by Tesla in Austin. You already have Waymo out there, right? So you have all these companies that are moving towards autonomous robotics. So companies that are in autonomous robotics, companies like Tesla, can absolutely benefit from this. All right. And not only that, again, look at the components that are going into these robotics or going into this, autonomous stuff. You're going to have the data centers. You're going to have, companies like CoreWeave or companies like the REITs that do data centers, DLR, Digital Realty Trust, or even Equinix, EQIX, right? These are data center REITs. And then you have, of course, CoreWeave, right? But you're going to have NVIDIA. NVIDIA already has chips for these robots, right? They make special chips for these robots. And not only that, thinking a little layer deeper for NVIDIA, they have the whole CUDA library. So again, I'm very bullish on NVIDIA. I can't shut up about them. But, again, just thinking further ahead, there's going to be so much robotics making waves in the future for companies. Again, you can, and I keep saying this, I'm sorry if I keep repeating myself, but if you keep looking at the trend, more and more jobs that are physical in nature will probably start to get a little replacement here and there with robotics. McDonald's already does it, right? McDonald's had their self-ordering menus. What's going to stop removing an entire kitchen and then just replacing it with an automated, cooking machine or whatever? Anyways, let me get off my spiel. All right, Amazon is developing AI software, again, to power humanoid robots to deliver packages, the information reported, citing a person who had been involved with the effort. The e-commerce giant is building a humanoid park, an indoor obstacle course at one of its offices in San Fran to test the robots. It is planning to test a variety of humanoid robots, including one from China-based Unitree. And again, you even have China already developed a lot of their, robotics out there. Amazon aims to enable the robots to hitch a ride in the back of its Rivian delivery vans and spring out to deliver packages. There is currently one such van in the park for testing, according to the report. For those who didn't know, I didn't even know Rivian was even still around. I was actually really surprised because Rivian was part of that whole craze in 2020 and 2021 where everyone was buying or trying to hunt for the next Tesla. Everyone's buying Workhorse, Neo, Rivian, and there's one other company, it eludes me right now, but it actually went out of business. It went bankrupt. It was traded on the public stock exchange. All these companies, all their stock price saw crazy growth and then the eventual decline. I think Rivian is down 89%. It was down like 95% last I checked months ago, but it looks like it's actually having a steady recovery. So this might actually be the one company out of the batch that seems to, have an actual future, but, we'll see. To note, Amazon already has more than 750,000 robots across its network, and these are deployed in fulfillment centers, which are closed environments. The report comes as Amazon launched a new agentic AI team at its Lab 126 R&D hub in Sunnyvale. The team will work on agentic AI frameworks for robots operating in Amazon's distribution and logistics hubs. All right, Jensen Huang, CEO of NVIDIA, he always talks about agentic AI, and this is the next wave for artificial intelligence. First, we had, just a chatbot, the basic chatbot. Now we have agentic AI that can actually do tasks and, can actually work by itself, right? It doesn't need human interaction. So artificial intelligence is getting better by the day. We're creating systems that can hear, understand, and act on natural language commands, turning warehouse robots into flexible, multi-talented assistants, right? That's the whole point of agentic AIs. You're going to have your own personal assistant. So this is absolutely crazy. We'll see what Amazon does. Amazon is not really all that loved. Neither is Google as part of the Mag 7. So if you're betting on, the future of robotics, artificial intelligence, retail, I like Amazon's business model. They have so much going for it. Not only do they have a really, really powerful logistics infrastructure, they have their Amazon Web Services sector, right? They have their own data centers. They have their big retail, right? Big retail. They own Whole Foods. They have their own pharmacy, their own ship pharmacy, right? They can ship you things, and their whole thing is all about instant and easy and accessible. So they really play on the whole convenience factor. So I like Amazon, I really do. I don't know so much about Google, to be honest. I don't really dig too much into them, but just being an Amazon customer, I do like their entire business. I've used AWS. Of course, who hasn't used Amazon shipping? To buy stuff. But yeah, Amazon just has a really good business model, in my opinion, right? Versus, some of the other hyperscalers. All right. So gold slips as stronger than expected U.S. jobs data seen dimming chances for a rate cut. All right. So to all my gold holders, I am sorry, but you guys got absolutely cooked today. All right. Gold futures fell on Friday after the U.S. Labor Department reported slightly stronger than expected jobs data that dampened hopes the Federal Reserve would lower rates in the near term. Again, I don't even know if we're going to get a rate cut this year. There's, hopes for a September rate cut, but it's even that is starting to dim, right? While silver added to its rally that has seen the metal hitting fresh new 13-year highs. All right, so silver has been making its waves, not just obviously in general, but also on YouTube. A lot of YouTubers are talking about buying silver, either silver-backed ETFs or just buying silver bars, right? Non-farm payrolls raised. We kind of already covered this. 139 in May. Gold gain on the week from renewed trade tensions, obviously from China, U.S. We still haven't heard much about any of the other trade partners. I'm actually really surprised about that. They must be going well. Geopolitical risk and a weaker U.S. dollar as President Donald Trump doubled existing steel and aluminum tariffs to 50%. The Russian-Ukraine war intensified and the dollar declined. All right, gold-backed ETFs globally reported modest outflows in May for the first time in 5 months, according to the World Gold Council. Again, gold is a safe haven. This is where people flock to when there's worry about, inflation, recessions, currency devaluation, or crazy crap that's happening just in the world, right? People flock to gold. An ounce of, pure gold in the United States, whatever carats, should be worth about the same wherever else in the world. So that's known as the spot price of gold. I'm not a super gold guy, all right. But I, just having read what I've read, a lot of people, they use the doom and gloom kind of model to the reason is why they buy gold, right? They don't trust the US dollar. This is why people like Robert Kiyosaki, Peter Schiff, they move to gold and Bitcoin, right? Peter Schiff doesn't like Bitcoin, but Robert Kiyosaki, big Bitcoin and gold holder, right? So meanwhile, silver futures are trading at their best level in more than 13 years as other precious metal types are being increasingly chosen for safe haven hedging, with gold recently setting new all-time highs, right? So our boy Michael Saylor is in the news, all right? Did a video on this. Strategy priced their Stride preferred IPO at $85 a share, right? So I'm not going to go too much into this. All right, you guys know that anytime Michael Saylor / Strategy releases new preferred shares, the money is used to buy Bitcoin, right? It is used only, well, not only, but it is used to buy Bitcoin. That is the whole meaning of these preferred shares. Now, having done the research on these, you had the Strike, you had the Strife, now you have the Stride. He's issuing these out with different tiers, right? At different tiers, they offer you different things, right? But the Stride offers you a 10% dividend yield on a quarterly basis. However, the dividend amount has to be approved by the board. Okay, so it's not a promised dividend, which is kind of high risk. But again, I can't see Strategy not paying you this 10% dividend yield. I think it would tarnish not only the reputation, but people wouldn't buy their preferred shares any further. Not only that, but Stride does not convert into MSTR shares, which you guys know MSTR is a proxy for investing into Bitcoin. It's supposed to be, according to Michael Saylor, a leveraged Bitcoin exposure, right? That's the whole meaning of investing into MSTR. A lot of institutions, they can't invest into cryptocurrencies directly, so what they do is they invest into MSTR, which is a proxy for Bitcoin. But we're going to listen to the man himself kind of explain this and explain his thoughts on Bitcoin. All right, so we had Michael Saylor actually on CNBC.
Now known as Strategy, expects to raise nearly $1 billion from the IPO of preferred stock that pays a 10% yield. The company plans to use the proceeds for general corporate purposes, including buying more Bitcoin. Joining us now is Michael Saylor, Strategy Executive Chairman. You've described some of these moves, these financial moves before to us, Michael. Is this more of the same, or is there anything unique or different about this round?
What's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And
I think that is crazy. This dude is not using traditional debt like the rest of the businesses. Instead, what they do is they issue out preferred shares to investors like you and I. We invest in these preferred shares, and that is the debt to MicroStrategy, right? We are the debt, but they use Bitcoin, or they use the cash to buy Bitcoin, and Bitcoin, if you're a bull on Bitcoin, it rises in value. So they're making out like a bandit, right? They can make out like a really good bandit. Meanwhile, we're getting paid for the risk, right? i.e. the 10% or the 8% yield from Strife, or now Stride. So like hearing this and actually researching how these shares are used by MicroStrategy it is pretty ingenious. Like, this guy just keeps issuing out new preferred shares, and that's what he's using to buy Bitcoin. He's not using, bank's debt or any other type of debt. He still has those convertible notes that come due every other year, right? And those are bought by institutions. So you had an institution like RexShares create an ETF called BMAX. So they bought a bunch of their convertible notes, and now retail can buy into BMAX, which is directly investing into those convertible notes. So again, this is just absolutely insane. I don't know of any other company that has done something this wild. But the more I learn about strategy and the more I kind of dig into it, the more bullish I am starting to get. I'm still worried about it because it can come off as kind of a Ponzi scheme. It can come off as like a really high risk investment, but if you're bullish on Bitcoin, you're a believer in Bitcoin, then the rest becomes irrelevant. But let's listen further.
And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due.
Wow. You obviously...
Just for the uninitiated, typically when you issue out a bond, it's debt, right? And it has a maturity date. That debt is usually a maturity date of 1 year, 2 year, 5 year, etc. So by MicroStrategy issuing out these preferred shares, they can call the debt whenever they want. They don't need to worry about it. You and I, we can hold the shares indefinitely as long as they're available, right? So again, that is a very fantastic strategy in my opinion.
Are the ultimate holder. You would buy, if you have money, you buy Bitcoin, I think, don't you? It doesn't matter whether it's up, down, or flat.
150% Bitcoin, Joe.
Do you think at this point that there's, let me just say, what are you waiting for at this point in terms of good news? I think the regulatory environment since the election is definitely improved. We've talked about how much harder it gets to mine, and there's halving. When is the next halving, and what are the next moves that it would cause the asset Bitcoin to get to some of these? I don't know whether you have Tom Lee type projections. I think Tom the other day said eventually it could get to 2.5 million per coin or higher before we never really will get to mining the last coin, will we? Not in our lifetime.
Not in our lifetime, but the last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of.
All right, we're just going to end it here. Basically, he's saying that, we're not going to be able to mine all the Bitcoin, so he's very bullish on Bitcoin. There's all these new companies. GameStop is one of the most notable that just came out recently, said they're buying it. And now Donald Trump Media, they want to start their own Bitcoin treasury, if I'm not mistaken, or it was a Bitcoin ETF. It's one of those two. So just every other company is like coming out now and they're saying, hey, we're going to be buying Bitcoin. This is obviously going to be a good tailwind for Bitcoin and Bitcoin holders because now you're going to have institutions, companies, and already governments have started buying up Bitcoin, right? You have China holding a bunch. You have the United States holding a bunch. They didn't buy them, of course. They seized them. But you have other countries in South and Central America that are buying them. And Strategy right now is the biggest Bitcoin treasury in the world. All right, they own like 530,000 Bitcoin. That's a little more than half of what Satoshi owns. All right, Satoshi obviously is a group or the person behind Bitcoin. They own, I think, a little under 1 million coins. So now Michael Saylor's Strategy owns a little half, right? A little more than half, right? So it is just crazy what has been happening with Bitcoin and what continues to happen with Bitcoin, and even more so with Strategy. So the more I read about Strategy, the more I really start to believe in their business model and what they're doing. Of course, there is risk. Obviously, there's risk. But when you're sitting on 562,000 Bitcoins, you're a little protected there. So anyways, moving on. Winklevoss twins are in the news for Gemini. Okay, their firm Gemini they already filed for an IPO. And this is kind of trending with a lot of other different crypto firms out there. You have Coinbase, you have now Gemini, you had Circle that just released that just did its IPO and did really, really well. We're going to cover Circle here in a second. And you also have Robinhood, obviously, that also IPO'd, and they have crypto. So it's just crazy that a lot of these crypto firms are now IPOing. Gemini was in the news 2 years ago, I think, for almost being insolvent or something like that because of that big FTX crash, and it affected Gemini as well. It affected a bunch of firms, but I really thought Gemini was done for, but it looks like they were able to stay afloat and not go down with the rest of the ship. Gemini, the cryptocurrency exchange and custodian found by Cameron and Tyler Winklevoss, has confidentially filed for an IPO in the U.S. According to a press release on Friday, the number of shares and the pricing have not been decided upon. The company said a listing is expected to occur after the SEC completes its review process, subject to market and other conditions. All right, by filing confidentially, Gemini can test investor appetite and prepare for a public debut without immediate scrutiny of its financials. All right, the announcement comes after the SEC wrapped up its investigation into Gemini in February. without recommending enforcement action and follows a $5 million settlement with the Commodity Futures Trading Commission in January. Gemini is the latest crypto firm to pursue a public listing as President Donald Trump's administration pushes more favorable regulations for the industry, which heavily funded his campaign. So again, going back to President Donald Trump's his campaign promises, he has two of the big ones that I keep an eye on. AI deregulation and crypto deregulation. We already have an SEC chair that is very favorable to the crypto market. So again, everything right now is looking very, very good. And then of course, in the one big beautiful bill, we covered this yesterday, there is actually a whole section for deregulation of artificial intelligence and to prevent states from enacting any type of law that would, basically regulate artificial intelligence in their individual states. So that one big beautiful bill, I don't know where they slipped it in, but they slipped it in. And then Marjorie Taylor Greene, MTG, Republican of Georgia, she came out and publicly said that she totally missed that, full transparency, but she would have voted no had she known that. So really, really interesting. Again, DJT is just making good on his promises, but more to the point for investors, you don't have to look hard, right? It's not hard to just read what his promises were and then work down from there, right? Companies that are involved in AI or crypto, this is honestly, I think, why Circle did so well, right? So let's talk about Circle real quick because there's nothing else in this article. Circle just IPO'd. All right, Circle is a stablecoin provider. They helped. They partnered with Coinbase to create USDC, if I'm not mistaken. So stablecoin firm Circle adds to stellar first day gains with another stock surge. All right, stablecoin issuers Circle Internets and Circle CRCL shares climbed 48% on Friday, extending a stellar run after a blowout market debut on the New York Stock Exchange a day earlier. New York-based Circle stock went as high as $123, nearly 4 times its $31 offer price, valuing the company at $32 billion on a fully diluted basis. Let's just take a look at this. This is Circle Internet Group. Look at this thing. Doesn't look like much until you zoom out a bit. There's a week, right? It started at $31. It's now $15. That is so freaking crazy. That is so crazy. Let me just check the chat real quick. So check it out. It says if a person doesn't have that much money and likes Bitcoin, MSTR, or Misty for monthly high dividend income, that might be the way to go. I'd agree with that, but you just have to keep in mind, the whole NAV erosion thing and what are you prioritizing? Are you prioritizing growth or income or total return, right? You have to keep all that in mind. Definitely if you're going to go with Misty. Do you own Tesla outside of ETFs? Ouch, says O. Excuse me. There are a lot of people that own, these high yield Tesla, Tesla shares. You have Tesla from YieldMax, you have TSLW from Roundhill. You also have one that just came out, TSII from Rex Shares. So anyone who got in yesterday with Tesla, man, shout out to you guys. Again, I say it all the time. I can't buy Tesla. I can't deal with that crazy volatility. But if anyone got in, today you definitely made out like a bandit. So, shout out to you guys. All right. Circle did so well because every IPO has become a meme stock recently. That is, kind of a fact. Hood, Robinhood, obviously we're looking at it right now. Hood is doing really, really well, but I guess it's supposed to be added to the S&P 500 or it's rumored to be added to the S&P 500. But I also like Hood, what they're doing. They acquired a crypto company outside of the United States that had international licenses. It's basically an all-in-one crypto, services firm in a box. So instead of creating all their own separate products and services and spending the time and money to develop all that, get the licensing and all that, they just bought a company outside of the United States, which already had all that stuff. I really do like Hood and what they're doing. I've been adamantly against Robinhood for a very long time, but actually seeing them and what they're doing, and not only that, but using the actual platform, I'm really pleased with Hood. Let's see. O says Circle will eventually sell off like Newsmax, Webull, and CoreWeave. It's funny you mentioned Newsmax and CoreWeave. So I don't know about CoreWeave. Newsmax was definitely a meme, but I mean, like, think about it. If you think really deep about it, I mean, who's in power, right? It's a Republican, everything, Republican House, president, and chamber, right? Senate. So Newsmax very conservative, and of course, you know, it was guaranteed because they love Donald Trump, period. So it was guaranteed that stock was gonna pump. I didn't obviously buy into it. I just don't do the meme stock stuff. But again, it came crashing down to fair value, right? I think it was hovering at like $23 last I checked. Hood actually deserves to be higher on fundamentals. I agree with that. CoreWeave. Now, going back to CoreWeave, I think a lot of people mistaken CoreWeave as a meme stock, and here's why. A lot of people think, and the bear case against CoreWeave is that they spend too much money. They have way too much capex, right? But people don't think about companies like DLR, Digital Realty Trust, or Equinix, right? These are two data center REITs. Now, these two data center REITs are very capex heavy. It is expensive to run a data center. It is expensive to buy the hardware to start a data center. So this is why they're very capex heavy. That was one of the biggest bear cases against CoreWeave, was that they're spending way too much money and they're not making enough money. But then you had, you know, NVIDIA, who's backing CoreWeave. You have NVIDIA. Then you have OpenAI, who started a $12 billion contract with CoreWeave for the next couple of years, right? That propped it up. And CoreWeave has two major hyperscalers, if I'm not mistaken, that's using their data centers. That is Microsoft and I think it's Google, if I'm not mistaken. It might just be Microsoft, to be honest. But again, CoreWeave, I think, you know, I was kind of blinded when I looked at it because, you know, their founders, their CEO, they were selling off shares like crazy. They used to be an Ethereum mining company, and then they pivoted to, you know, to artificial intelligence because they already had all the NVIDIA GPUs and everything. I don't know. I was honestly torn between them. I still think, you know, well, now I think, you know, CoreWeave does have some really interesting prospects, you know, but does their share price reflect all of that? I don't know. I don't know. I think it is on hype right now. I think it will come crashing down, but I don't think it'll come crashing down like Newsmax. I think, you know, it could be worth, you know, a lot more money in the future only because of this AI thesis, right? The one I keep talking about. There's going to be future demand for the next 4 to 10 years, easily future demand. So CoreWeave being an artificial intelligence specific data center, that's all they do. This is what's going to prop that stock up quite a bit, in my opinion. All right. In my opinion. All right. Anyways, Saucemaker, welcome back. Saucemaker is part of the old guard, so appreciate you. Saucemaker says was made fun of for stacking Tesla yesterday. Happy week on me now. Saucemaker's in the Discord group, and he did say that, you know, he bought a little bit of Tesla, and he knows that like we've all seen the song and dance with Tesla, right? Some bad news comes out, it drops like crazy, right? Elon usually is behind it. Elon usually is the one that causes the stock to drop, right? But probably a day or two, a week, you know, maybe a month or two, the stock just rips to new highs. So there was another YouTuber on here, Jeremy Lefebvre, I think his name is. He has a whole channel, but he actually exited his Tesla shares. And he had a lot. I think like he had like, I don't know how much, but he had a lot. But he exited right as Tesla went on its bull run, right? Not his bull run, but, you know, it's run up. So he got out at $220 a share or something like that, and then it spiked to $340. So that really, really sucks. I know that's painful. But again, it's the Elon factor. It's the Elon Musk factor, right? The volatility factor. Anyways, moving on. Let's check I already checked the chats. We're going to move into the market updates. We're at minute 52, so we're pretty much at the conclusion of the stream. So I'm going to check the chats. Check the poll here. So the poll was, do you think the bromance between Trump and Elon is over? 30% of you said, hell yeah, Elon was reckless. 36% of you said, nah, they are bros, they'll make up. 33% of you said, I don't care as long as my Tesla does well. I'm going to agree with the 30% that says, hell yeah, Elon was reckless. That comment he made about, you know, Trump being on the Epstein files or Epstein list, that was not good. That was pretty much a bro ending tweet, right? I mean, the whole world saw that, and you probably have, you know, people looking at this fight and just kind of snickering in the back. That was not good for PR. So I really don't think that they're going to reconcile. I think if anything, Trump is, if you know the ego of Trump, I mean, he's going to find a way to get back at Elon, probably, in some subtle way or subvert Tesla or his companies by either pulling contracts or going it the fair way, putting out the contract to bid. You're going to have Tesla, or you're not Tesla. You're going to have, Starlink. You're going to have Verizon, AT&T, show up to the bat and say, all right, we're putting our bids in. Oh, well, here's, I see Starlink. Oh, this is owned by Elon. Let's just go ahead and cancel that one. And now we have it between Verizon and AT&T. So we're going to go with one of these two, right? So I can see that this is going to have some really big repercussions later. But I'm going to go ahead and end that poll. All right, moving on to the market updates, and then we'll do portfolio updates, and we'll close out the stream, guys, so you guys can go enjoy your Fridays. All right, so S&P 500, we are up 1.03%. All right, we are doing excellent. We are actually up for the year 2.25%. S&P 500 made a nice recovery, thankfully, and we have the NASDAQ trailing right behind it. All right, for the day, they are up almost 1%. 99 basis points. Year to date, they are up 3.75%. Thankfully, almost at a full recovery from all-time highs. All right, not too far off. We also have gold. Again, my gold holders, I'm sorry you guys got cooked. Today, we are down 1.31%. All right, so a lot of outflows from gold, as we already know, but it's still one of the best performing assets year to date. Again, when you look at this trend line, it looks like it might trade flat for maybe another month or so as things get worked out, trade agreements get worked out. I could honestly see this probably not going like this trend line earlier in the year because things were so uncertain, right? Things were so uncertain. There was so much fear in just a broader economy globally, actually, not just in the United States, but you had tariffs being placed on all countries. That is not good, right? People are going to flock out of equities, move to gold for, safe harbor, for safety. Plus you have, again, you still have regional conflicts going on. So that's always a nice thing. We have Bitcoin doing okay. All right. Still above the 100,000. It was starting to sink down to like 101,000, but looks like we ended the day at 104, thankfully. All right. Year to date, Bitcoin is the second best performing asset. All right. With 11.66%. So hopefully we can get back up to our highs of 111,000, hopefully 112 in the next coming months. And then for the US 10-year Treasury, again, this spiked. Go figure. This thing it's never going to come down, right? REITs, you guys, me, we're cooked. We're cooked for the rest of the year. There ain't nothing happening for real estate this year. That epic bull run we're all waiting, praying, and hoping on is not happening. It'll probably come in 2026. Hopefully, we will see. Right, I could see it more likely in 2026 now because we only have 6 months left in the year. We're probably going to get a rate cut, maybe. So, and we still have all this economic uncertainty that's still ongoing. We still don't know what the effects of the tariffs are going to be, which countries are going to be impacted, what the trade agreements are. So there's still a lot of stuff. All right. Killer Poet says, I hope ICE don't turn up at Elon's door anytime soon. Yeah, so Steve Bannon, who's a Trump supporter, far right conservative, he was calling for Elon's to be drug tested and to get deported and all this other stuff. It's what's crazy is that this is high school at a national level. Like this is really high school at a national level. It is insane what is going on. And this is all between billionaires, right? This is all between very wealthy people. And you have Bill Ackman, again, coming out of the left field and like, hey guys, come on, let's chill out for a bit. Let's cool it down, right? It's just funny seeing this. You can't believe it. You can't make this stuff up. VNQ, which is we use as a weather gauge for the REIT market. This is the Vanguard Real Estate Index Fund ETF. All right, this is sitting at just a hair shy of $90. All right, I need this to get over 90 so my REITs can recover. But we ended the day in green. I will take it at 48 basis points. All right, year to date, 1.79%. So not fully recovered again from the all-time highs earlier in March. Hopefully we'll get there. This was Liberation Day or Liquidation Day, as some of us know. That was such a crappy day. All right, let's look at the portfolios and then we will conclude the stream. All right, so here's the portfolio. Ended in the green. Well, actually, sort of ended in the green. Not really. Yeah. So we had this dip right here. I was hovering at 106,000, and then we had the bro feud, right? Ended it down, and then things just kind of ended good, sort of. All right, no new changes to the positions. All right, I still hold NVDW, PLTW. My little Ondas is ripping. All right, this is a penny stock. This is a counter drone technology stock. I really like it, but it's starting to pop 61%. Holy hell! I was red. Someone mentioned in the Discord that a couple videos ago I was in the red, and now it's up 61%. So shout out to everyone. Chippy doing well. All right, 9% semiconductor ETF. If you want to take advantage and make some money of the AI thesis, but a tertiary sector known as semiconductors, you can consider Chippy for your portfolio. It holds a lot of US-based semiconductor companies, so it doesn't really hold, any China-based semiconductor companies. It does hold 3 outside of the United States, and that is TSMC, Taiwan Semiconductor, which they're moving to the United States. They're going to be a US company before you know it. And you have Netherlands ASML, and there's another one. I keep forgetting which that third one is. All right, XPay, nothing new here. And XDTE, nothing new there. And we have retire on dividends. All right, hey, shout out to you, Rod. Thanks for joining. 5K, I hope. All right, I got to keep pumping out that valuable content. Ron M says Trump and Musk, best reality show ever. I would agree with you. I would definitely agree. That was crazy, just what was going on. O says liberated all of our gains, from Liberation Day. That's pretty much it. That was it, definitely in a nutshell. Let's see. All right, cool. Moving on. Let's see. We got our M1 Finance portfolio. I got to log into this. Sorry for this, guys. It always times out, so I always have to log back in. All right, so this is the M1 Finance portfolio. This is where all the REITs live. This is where a big technology ETF lives, VGT, BDCs, and crypto. Nothing new for all these positions. Again, it's just going along with the waves. Funny enough, I was talking to someone in the community, and he had mentioned that he bought Meta right before the crash. And he was just saying, oh man, it sucks. It feels, I feel bad. I feel kind of dumb. In my mind, I'm like, well, I feel dumber because I bought $170,000 worth of VGT February 18th, right before the tariff talks with Canada and then Mexico, and then Canada, Mexico, and then China, right? So it's just been on a steady decline, but 2% away. All right, please let me get up there. All right, let me get in the green with this damn ETF because I've seen nothing but red since I bought it. So anyways, guys, that will be it for this stream. I don't think I have anything else. All right. I know you guys want to continue with your Fridays. I hope you guys have a outstanding weekend and enjoy yourselves. All right. Stay off the finance news, unplug, go touch some grass, go have a beer. I don't know, play with your dog or cat or whatever. Right. I'm definitely going to try and disconnect myself for this weekend. But with that being said, guys, I appreciate your support. I really do appreciate you guys joining me in the chat and cutting it up and joining this stream. You guys take care. Have a wonderful weekend, and I will see you in the next video. See you in the next stream. Take care.